Hey guys, I'm David Thapar and welcome to FinTech Insider on Air episode 48. Last week we came to you live from New York in Barclays Rise, where I was joined by Lindsay Davies from CB Insights. We discussed everything that's been happening in the last quarter for US FinTech trends, and they've actually put out a really interesting report. So if you want to catch that episode, head over to the 11FS Twitter channel and YouTube channel, or head over to the CB Insights website to check out the stuff that they've been putting out. This week, we're going to be talking about venture building, and specifically about Wilbe, which is Devika's product, a business that you've been building out for the last couple of years. We'll come to you in a second, but some statistics on this first, as we always like to start with, because venture building actually is really changing, I think, how this industry is working. More than $2.5 billion was invested by VCs into UK startups in Q2 2019 alone, which is a hell of a lot of money. Venture capital over the last few years has seen a bit of a fragmentation and increasingly looking at different models, with venture building one of those things that is really sort of starting to take hold. Venture building is offering a very different model, I think, where organizations are much more vested in the success of the business, and actually making them successful, not just giving them money in terms of where they're going. So for me, all of this kind of leads to hopefully a different model that we're sort of seeing in this space. But maybe, do you want to give us your introduction and actually, then tell us a little bit about your background, and we'll get into Wilbe in a little bit.
Yeah, sounds good. Great to be back, I feel.
Yeah, so Devika was on, about 3 years ago, you were on an AI deep dive episodes that we have. So if you want to see me be embarrassed about saying somebody's name wrong for at least 10 minutes in that episode, head back to that episode. I think it's like 90 or something like that. But you were very kind with me.
Okay, lots of improvement. And we've been friends since. So we're building Wilbe. I like that you refer to it as a product. It gives it a different lens. What we do is we help scientists, founders commercialize their research at scale, and we do that through hands-on support and funding. So essentially, we act as the bridge between academia and the market. So all the great stuff that happens within labs and academic departments, which often doesn't see the light of day because it's hard, we help commercialize it so that we can get the first set of investors on board and even the first set of customers on board. So that's essentially where we sit.
Yeah, and that's there's so much untapped good ideas where you've got somebody who's incredibly academically gifted, but maybe not been used to being an entrepreneur, right?
Yeah.
Great academics, maybe not an entrepreneur to start a business.
Yeah.
And most, from a VC perspective, people want to see traction in either usage or user numbers or the benefit in the real world. So, how are you sort of bridging that gap? Are you having to become an expert in, have you suddenly got 17 different PhDs because you're studying all of these different things? Or, how are you sort of bridging that gap for people?
Yeah, no, so good point. And that said, not all academics want to become founders and want to commercialize their research.
But I think they want to see their ideas manifest, don't they?
And a lot more today than ever before, because you're seeing a lot of that out there, which is fantastic. Yeah. But the question becomes, how do you commercialize? And one aspect of it is actually evaluating whether there is any potential for this to be a scalable business, the one that's ripe for venture capital. But then the other piece is, as a team, are you as a team fit to actually lead the business? And that's probably a metric of two, because some scientific founders want to see themselves as the head, at the helm of the company, whereas some realize that maybe there's a bit of a gap and we could do with having a well-rounded team that brings in the commercial expertise. Yeah. So we would help on both those accounts, because that's quite a common theme in terms of you're building not just a company, but you're also building the team and reframing the mindset from being someone who's a scientist or an academic to being someone who's also commercially minded.
Yeah, that's always an interesting challenge, isn't it?
Yeah, and we don't do it all ourselves. So we, because there's so many different themes that we touch upon, and there's so many I guess, problems that we would like to solve, we would liaise with commercial and technical experts on different fields at the point of due diligence. And sometimes those could be companies as well to say, hey, does this make, so just for an example, to tie it back home, if we're seeing, two professors who are working on something that's really novel in the space of machine learning and specifically deep learning, and as a use case, we might brainstorm with them saying, this could be very neat within a particular financial services application. I would probably hit you up with an email saying, hey, D, what do you think? Yeah.
I mean, and you're obviously no stranger to sort of emerging technology. I mean, where we first met, you were at IBM, right? So in the Watson team. I mean, tell us a little bit more about your background then. Before I'll kind of deep dive into some of the next bit with what you're doing now. But tell us a little bit more about the background that got you to founding the company.
So I have an operator background. I was essentially commercializing AI in a sense for large enterprises, including banks, with IBM in their Watson team, and I did that for about 5 years between New York and London, which is where we met, and in a few different capacities. So from selling first of a kind deals in conversational AI back in like 2015, 2016, to building new products that were the cross-section of AI and regulatory compliance, and then also I guess getting a bit of a lay of the land as chief of staff, which was a very well-rounded experience to see how do you build enterprise software, how do you price it, and how do you sell it.
Yeah.
But at the end of the day, I think there was a point where I was just like, does this excite me enough to just continue down this path? And I think there was an itch that I wanted to scratch, which was going out and doing something more exciting, something with more impact, I feel, and also something of my own.
Yeah, I mean, it's always nice to have that slightly nervous feeling when you're building your own company there. So, and I mean, I remember like vividly the presentation you did was awesome. Like, so, and actually conveying incredibly technical subject matter like artificial intelligence and machine learning to a group of an audience full of like normal humans, breaking technical things down and actually making people understand them is like clearly a big part of what you've done, but also a big part of what you're doing now, right?
That's absolutely right. I mean, right from building a pitch deck when you first see it from an academic point of view, to actually helping pitch it is definitely a journey, and it helps to have experience in that space. It also helps to be able to understand the mindset and be able to translate between the two.
Yeah, and so what do you see, I mean, this shift in that model, I kind of referenced earlier on the shift from purely venture capital to venture building. What gap do you see the building part of it really sort of fixing for people right now?
So I think there are a couple of elements to this. One, venture building is probably not suited for every kind of business. So there's an argument that some would say that if you provide too much support to a founder, then they're not doing their job, right? If they need to be a successful company, they need to do it on their own,
sure.
which I completely agree with. So I think it's better suited for certain types of companies, and obviously I'll say particularly the kind of companies that we focus on, because the whole space of commercialization is hard, and the amount of support that you need in the first 12, 24, 36 months of your journey is considerable, and around basic business building aspects. So I think those types of companies are very well suited to venture building, and then there are other models of venture building out there if you do research. Then the second piece of it is that there's just so much capital out there, and you're probably aware of that, even though you haven't dipped into it yourself.
I've stayed away from VCs, but it doesn't mean they haven't asked. So
and if you can, that's great, because you retain all the equity, which makes a lot of sense. Which goes back to the same argument for venture building. If you flip it and say that you should really be giving equity away to those who provide real value.
Agree.
Value is not just money. Value is money plus.
Yeah.
And there are some venture capital firms that have been around for a while and that do that incredibly. And then there are some that just decide to follow on, which is not very exciting.
Yeah, I mean it's interesting because I personally, I mean we've sharing secrets. We've looked a few times at starting an investment angle, and actually like the thing that always puts me off it is pure money doesn't de-risk it for the people you're investing in or you, really. Because if you put money into an organization, you want to be sure that you can help them be successful. It's like betting on something that you can affect the odds. That's really as I see it, really. And actually, there's so much failure in VC funds in terms of the outcome from them or the equivalent sort of benefit from it. Because arguably the people who have the best network, the people who can work with people to make their companies actually successful, for me, the ones that really, really win. So, I mean, it's that whole thing around smart money versus dumb money.
Exactly.
You know, dumb money, I think, is running a very short clock now. And increasingly, I think people who are starting organizations are looking for people who, to your point, don't just bring cash. The cash is nice. It kind of means the lights stay on and people turn up to work and stuff. But fundamentally, can you help them shape their idea? Can you communicate it differently? Can you connect them to people that actually might be able to have an accelerator effect on the things that they're doing? But it feels like the industry growing up to a certain degree.
Yeah, and some people might say, oh, you know, you're crazy. You want to do all this hard work. You know, we're better off just writing checks.
Startups are hard, right? So and you're in multiple startups at different stages.
Multiple startups and often in very technical areas that are, I mean, a lot of the companies that we look at aren't even companies as yet. So they're still research projects, grounded in probably years of research, and very good that too. But they haven't even seen the light of day in terms of a customer validating that this is worth going into. So it is risky in that sense, but it also has a lot of potential because we think that it has layering underneath is science, and that's defensible versus just an app, which is not necessarily defensible. And our genesis is in providing hands-on support to very early stage technical founders. That's how actually Alessandro had set up the company in 2017. And since then, we built the portfolio to about 12 companies rooted in AI and blockchain, but in different applications. And a lot of those companies we incorporated ourselves. So it's quite early stage. But I think it's through that process. And some of those companies were emerged from university research departments, and which is where we realized that there's so much potential in terms of science that's not being commercialized, and also so much potential in terms of how let's say traditional models of investment might not be well suited or might be underserving this talent pool.
And I guess with that then, I mean, what type of idea, if somebody's kind of listening now and they're like, I've got like 10 PhDs and I've got this amazing idea and some proprietary research I've done into something. Like, what are the types of things that you're working on today that you can share with us? I appreciate there's a lot of sensitivities around it, so you won't be able to give specifics. But what type of ideas?
So one of the ideas, so some of the areas that we like looking at and that we also come across quite often is in core AI and ML. And often they're being applied in areas of healthcare and sometimes in financial services as well. That's very exciting because I love that. I like that space. And there's just so much potential within the field of biotech and life sciences that we're finding ourselves to get more and more savvy on, because that's an area which a lot of academics are let's say focusing their use cases on. So that's a very prominent field. So we would theme that as solutions that are improving the quality of life, so to speak, and that's your physical health, your mental health, but even your financial health, and hopefully there's a convergence in the future. And then the second area that we look at and would like to see more of is within the field of renewable energy and climate change, and again, either technology solutions that are driving this. So I think I had mentioned something we were looking at around satellite imaging for detection of wildfires. Another company is assessing water quality and yield and productivity on agricultural fields through a sensor network. So those, and then there's of course carbon capture companies and other sorts very interesting innovations happening within that field that I think will take off more now than they probably did a decade or 2 decades ago. And then another area, so that's climate change, and then another area that we care about is security and privacy, and that could be, for example, looked at a company recently that's looking at security on edge devices, so or on your IoT device, which is going to be, I think, a big thing, and or you're building deep learning models that are private and anonymized at the get-go. So I think those will be interesting. Those are some areas that we, either have come across or that we find interesting.
I mean, it sounds amazingly stimulating. I mean, I remember me and you caught up for a coffee, and I was like, I mean, we've like built out a bank for somebody, and you're putting satellites in space to make sure people can eat. I mean, it's like it's an amazingly rewarding thing that you're kind of stepping into here. It must be very motivating.
It's very motivating. It's a very long journey, though. So it takes, I mean, it could take anywhere from like, 1 year for it to just go flat out nowhere, or it could take, north of 10 years to actually have, some sort of sizable impact. But for us, it's very important that it's solving a real problem. And I think the good thing is that often when the kind of founders we meet, they are solving real problems. So which is kind of, you don't have to like call it out as a separate theme for investment. Because a lot of folks who are working within academic research labs, they're all looking to solve problems that aren't necessarily Deliveroo or Uber. So
I mean, that solved the problem for me, but maybe not the
that's true. I mean, I used it too,
planetary eating, maybe not so much, but
sustainable eating.
Yeah, exactly.
Right? Sustainable. You posted about Game Changers, the movie. I haven't seen that as yet, but there's so much happening within sustainable food, which is very, very exciting.
And it feels like, I mean, there's always been the talk of these types of topics coming along, but it feels like there's more of a demand now from a consumer perspective for sustainability from an investment perspective, or impact on even as you say from a financial services perspective, how funds are being invested. People are looking for much more sustainability. But I mean, the topics you're covering though they're global impacting things, climate control, or the crop rotational thing, or like how you monitor these things. In many instances, it's like things that if it happens, it's not just the company that's really successful, but fundamentally the planet is better off, right?
Yeah.
That must be, again, it's a long payoff, but I mean, you seem like you're having a really, really good time.
Yeah. The US calls that impact investing. We don't see a difference. So
they always like good branding and stuff, don't they? I mean, so where do you see the company going then? Because obviously, I mean, you're not just making good stickers and nice swag type things. So what's the future of the company look like? Is it continue to expand out with the investments that you can make, or do you branch out into other areas of impact from an investment perspective? Or?
So we definitely want to be at the center of commercializing science. So right now we're focusing very much on UK universities, and we're probably not even touching the breadth and depth of research that's coming out of UK research hubs. And there's a lot of great research coming out of the UK, and I hope that continues despite everything.
Well, that must be the really big academic study points for these things are producing people who are producing amazing good ideas. So feels like there shouldn't be any shortage of it, really. How the academic process works from a PhD perspective is it has to be original, it has to be unique, right? So you're fed opportunity there by being in the proximity of really, really smart people, and the more you can help people, the more momentum you get on people wanting help, right?
Absolutely, and there's a lot of great talent in the UK. It's just that in the early phases of commercialization, you are often grant funded, not all the time, and that grant money has to come from somewhere. So hopefully that doesn't change.
And it was predominantly European funded, wasn't it?
Yeah.
Take that, Brexit.
Yeah.
But you see that, I guess, even if from a talent perspective the universities are different, then are you looking at expanding out from a geographical perspective to sort of hedge your bets a little bit there?
Yeah, so I was actually in the US for the last 2 weeks for a couple of meetings. And I think the West Coast is obviously very well served in this space. Out there, I think it's just now ingrained in the DNA in some sense. So,
as in the VC nature.
The VC nature, the building nature is that you're willing to take a bet on just two, professors with an idea, and if that bet is 10 million, and that's I don't think we're quite there yet, and I hope we do get there out here in Europe. And I think it's going to happen, as you quoted some stats in the beginning. So maybe that's probably not an area we would look into. But the Northeast is interesting because there are some areas that are that could do well with this kind of support at that very early stage of commercialization, where often your routes are angel investors and the tech transfer office.
Yeah.
So yeah, who knows if we can figure out a good method of scaling, but scaling with quality rather than just what they call spray and pray. That would be.
Well, and I guess that in this model is really the hard part, isn't it? Because essentially everything that you're doing it's not quite moonshot idea. Some of them are literally moonshots, aren't they? But like literally being in a situation where you're betting on really emerging technology and really, really early stages.
Yeah.
I mean, patience has to be one of the greatest virtues you have right now, right?
Absolutely. But to your point, some of them are moonshots, but some of them not well so. I mean, you have some technologies would be better suited to be brought in-house within a corporate because corporates have done something really well. They've established the scale, the networks, and the global presence. So it might make sense to bring, a medical device, for example, in-house. So, and we're seeing corporates also become such an important part of the ecosystem and as an important stakeholder from that.
I was going to say, from a commercialization distribution perspective, it's something that, you're increasingly seeing more and more kind of IBMs, Accentures kind of partnering with very disruptive technology because they've got distribution potential into all of the incumbent organizations. And that, the whole sort of innovator's point of, do you get innovation or distribution? Well, if you can really get innovation and you can partner for distribution, that might be a really interesting model.
Yeah, because it will take years to commercialize yourself. It depends on what you're doing. If you're building a whole bank yourself or a whole insurance platform, it's different. But if you're solving this one very important problem, you might be better suited for to get the scale through a partnership.
Cool.
Which is quite common in this world.
Yeah, but you look like you're having a huge amount of fun.
Yes.
Every time I see you, you've got a big smile on your face. So clearly impact is impactful for you as much as the planet, right?
Yeah.
And you're enjoying it, right?
Yeah, I'm loving it. Yeah.
Good. Well, it's good to see you back in London anyway, and thank you very much for joining us. I hope the company goes from strength to strength, and definitely, if there's anything any of you guys kind of want to get in touch with Devika, where can people find out more about you?
LinkedIn, Twitter, email is firstname@wilbe.com.
Great. And your website is it www?
Wilbe.com.
And do you want to spell it for people just so they know?
Oh, yes. It comes from Wilberforce, actually. So it's WILBE.com.
Thank you very much. All right, guys, thank you very much for tuning in this week. If you want more insights like this, why not listen over on the FinTech Insider podcast? If you head over to iTunes, you can download that or I think Android has one too. Don't know, but Google it. I'm sure you figured it out. If you haven't by now, head over to 11years.film and you can catch the documentary that we filmed charting the last 11 years since the financial crisis and everything that's happened since then. If you want another topic discussed for On Air, we'll just hit us up on those emails or find us over on Twitter @FinTech Insiders. See you guys for next week. Bye-bye.